Greetings everyone, welcome aboard. Happy Thursday to you guys. March 24th, 2011. Here's your live trade and recap. We had a good day today. Obviously, Thursday this morning, guys. End of the first quarter. Now we know another slow start to the day. We know why. End of the first quarter, right? It's going to be slow. Obviously, we're staying patient right now. The key right now is being patient enough to wait for the volume to come in. Those little bits of time, end of the first quarter, volume comes in, we get some trading opportunities. It's a lot like trading the last 2 weeks of August, right, where the volume is so slow. Now, of course, the last 2 weeks of August, it's because traders are on vacation for the end of the summer. Right now, it's the last 2 weeks of the first quarter, right? Same type of situation. Traders are distracted by other things in their lives right now. They're not coming to the market to trade. So we got low volume this morning. We had news at 8:30 this morning, came out flat as expected. Well, we weren't expecting flat news, but when we saw the market go flat afterwards, right, we expected that because the news came out flat. So jobless claims come out pretty much unchanged this morning. We had durable goods come out pretty much unchanged this morning. Everything pretty much stayed pretty flat and sloppy there. So we stayed waiting. We waited through 8:30. 9 o'clock comes around. We got crude at the highs. I sold the highs on crude oil today. Now, kind of an impulse trade at the highs there. Got caught for a small loss there on the crude. And then, once we got towards the lows, I then bought those lows. We went back up to the highs. When the dollar was dropping late this morning, we were at the highs on crude. We broke through the highs. At that time in the morning, dollar was really moving quickly to the downside. Crude was also moving fast to the upside. We got into the trade. Final trade on crude today was a great example of this dollar correlation breaking down. What did we see? I was in the trade long on crude after seeing the sellers fail at the highs. The dollar now is dropping like a rock, moving very quickly. And I initially had put my final target at the high, but then after seeing the dollar drop so fast and after seeing the crude start to pick up speed and big buyers come in, I decided to push my target a little bit higher. That was a bad decision, right? That was a mistake because I forgot one key factor. Low volume will cause that dollar correlation, right, to break. So now we have the dollar falling, but crude isn't rising as fast as we're used to seeing. And this is all because of low volume. Low volume is always the culprit for lack of consistency. And what happens is there physically are fewer crude traders to take advantage of the dollar rising. Simple as that. So dollar falling. So dollar was tumbling. Speed picks up, big dollar sellers. Speed picks up, big crude buyers. All signs point to test the highs. So I push my target up to the next level of resistance. Now, 99.9% of the time, when that dollar is dropping, when the speed is rising, right, this crude market is going to jump. But it never came. So, of course, I get my +5, my +10, and then it just curled over and died on us. This is a great example. Everything was telling us you'd be a fool, right, not to let this thing run. And so I put my stop at the point of entry. Now, usually on a wave pattern, I'll put my final target for a wave long at the swing high. This case, though, I looked for a target above it and ended up losing that final target because the dollar correlation, right, didn't work out. Then on gold had the same situation today. Now we saw gold this morning. Now here's what happened. We originally saw gold at the lows of its sideways range. And at that time, we had the dollar expecting to drop, so we tried to buy. Very slow though for the first two trades on gold. The first trade, +5, scratch. Second trade, +5, +10, scratch. Then finally the third trade, again, this is that late in the morning now. The final trade was a fast track winner for you guys on gold. So we did get one winner on the fast track today, finally, right? Waiting patiently all day today, yesterday as well, to get those fast track rules to line up. But on the gold this morning, final trade of the day, what do we got? Dollar is dropping. And we're not talking about just a lazy dollar, right? If you guys recall, okay, 11 o'clock-ish, this thing was really moving. I'm sorry, 10:30-ish, right? 10:15, really moving. So dollar's really moving. We're expecting that to have almost a tick for tick boost on the gold. But again, didn't happen. Dollar dropped, but the correlation was broken. I did get the winner on the gold, right? Got my +5, my +10. But then just like I did on crude, I get a little bit ahead of myself, I think. I forgot that we were trading the end of the first quarter, I think, this morning. And this happens, right? On days where you're waiting a lot, at least for me personally, I always find I do impulse trades more often when I'm waiting a lot. I tend to forget about my rules. It's almost like I'm out of the rhythm, and therefore, whenever the market moves, I feel pressure to get in the market. This is one of the most typical things this time of year, is that the market is going to make it feel like it's time to take some trades, right? We have that impulse, or that big buyers come in, speed picks up. But we have to remember, we need to look for a little bit more confirmation until we get into April, right? Because the end of March, the last 2 weeks of March, the end of the first quarter, we're not seeing that volume. And so this morning, both on gold and crude, we made money on both markets. We also took a trade in the Russell today. Gave you guys about 20 minutes heads up on a nice short off the highs in the Russell. Took you profit the low of day in the Russell. Good trade in the Russell. I traded crude and gold, though. 2 examples on gold and crude today where the dollar index, right, that correlation, again, because there simply weren't enough people trading the market today, it breaks down.